Hello, how to estimate your tax payment for 2023. So, why should you make estimated tax payment? So, if you are earning income on interest, if you have money in your saving account and you are earning interest on it, and if your income, your saving there is very large and you are making interest income or you are making dividend income on investment, or you sell stocks and you have capital gains, or you have rental property and you have rents, or you are renting a portion of your own house and you have rent income, but you don't have a natural business entity, you are doing that as a self-employed side hustle, you have royalty income, or you have self-employment income, or self-employed income as a freelancer, or you are LLC partner, you might have income even as an LLC partner, even if you don't expect a distribution from the LLC. Your share of the profits, it is an income to you, even if it's kept in the business. Therefore, you might owe tax on those incomes and profits. And based on the tax apply on those incomes, you might have to make estimated tax payment. So, earned incomes not subject to withholding that require estimated tax payment include self-employment income, interest income, dividend income, rent income, gain from sales of asset prices, award, or even if your salary on you don't feel like you are getting the amount withheld from your salary is not enough, it's not high enough, you might even have to make estimated tax payment to cover that. So when an estimated tax payment is required, if you estimated that you might owe more than $1,000 at the end of the year, then it is recommended you make estimated tax payment, because if you owe more than $1,000 when you file your 1040, you will pay penalty on the tax you owe. So if you know it's going to be more than $1,000, it is advised to make estimated tax payment to avoid paying that penalty. But how do you know that your tax will be more than $1,000? So you will, if you take your tax return from last year, let's just open a 1040 and you got a refund. So if this year you feel like you made more outside of your job, and so you take your job, your gross salary, plus how much you think you made as outside of that tax was now withheld on, you put it together and you open publication 505. You just search it on IRS website. It could be IRS publication 505, or you can even search 1040 ES on irs.gov, and either one will have tax rate schedule. So let's scroll down to I'm not seeing it quickly here, but let's scroll down to the tax rate schedule on page 29 of publication 505, tax withholding and tax and estimated tax. So you know your filing status, that when you file your 1040, your filing status. If you don't know, you can just pull your previous year tax return 1040 and you look at the top and you should be able to find the status that you selected. Filing status, and let's assume you are filing with your spouse, married file jointly. Then you go to publication 505 and you locate that section of filing filing married jointly. Let's go to schedule Y1. So, and there are two ways that I'm going to show you how you can estimate your taxes, but this one is just how to know you owe more than $1,000. So you will, in fact, yeah, let's just continue. So you will use that total and you'll find your income bracket. So the income bracket, once you find your filing status, the income bracket should be, your income should be more than the starting bracket amount but less than the ending bracket amount. And you, when you find that area, you locate the tax rate associated with that bracket, and you just use that to time that extra income you made at the side to see if that total 2,000 or more. If it did, what the amount is, you can compare it to your tax refund. If your tax refund is more than that amount that you might owe, then you are not going to worry about it, because last year you got a tax refund. Let's say you total everything and the tax is $1,200, but you got $4,000 in tax refund last year. That means chances are you will get about the same this year, like for 2023 return, and that will cover that tax that you'll owe on that side business. I don't know if that makes sense. So that's one way to figure out as well how, if what you are doing on the side will generate a tax debt for more than $1,000. Okay, so how to figure out estimated tax for self-employed and LLC members. So there are two ways that I'm going to show you how you can do that. One is more elaborate, is when you are using IRS worksheet, estimated tax payment worksheet. That allows you to pay less tax, and you might owe a little bit but not to the point to pay penalty, or you might have a little bit of refund but not too much. So it get you close to the amount, to the exact amount, if you do it with a good estimate. But it takes time. So I'm going to show you that. And the other option is simpler, faster, save you time, but you pay more tax, and the chances of you underpay and owe a penalty is non-existent. But the chances of overpaying is high, because you are going to pay more and you will expect a large refund back. So if you don't mind paying a lot in taxes and get a refund, then that option might work for you. But if you would like to pay less tax, then the worksheet might be the right option for you. Just know that it takes more time for you to work through those worksheets. So now, so if you are a self-employed, a freelancer, or a single member LLC, or you are an LLC member, as an LLC member, like I said before, you are going to get on your Schedule K1, you'll get a portion of the profit that is allocated to you based on your share of ownership. And even if you don't get distribution from the LLC, you might owe tax on that share of the profit that is yours, and that will go on your 1040, and then that means that will increase the income, the taxable income on your 1040. So, and if that will cause you to owe tax more than $1,000 on your 1040, then an estimated tax payment should have been made. So if you are self-employed, you are an LLC member that pretty much work in the business, or you are a freelancer, you will complete self-employment task. So that means you will use worksheet 2.3. So you'll find those worksheets on the publication 505. And we'll go back to the publication. No, let's think the worksheets are below. So you will use the worksheet 2.3 for self-employed. And what that does is worksheet will allow you to put your estimated income and profit from self-employment on it, and will guide you into applying the Social Security tax, the employee and the employer portion 12.4%, and the Medicaid employee and employer portion as well will be applied to it. And the result from this worksheet will go on the worksheet 2.1, where you are going to estimate the tax. You will also use the worksheet 2.4 for standard deduction if you are going to claim standard deduction. Now the standard deduction is high, then a lot of people will claim the standard deduction instead of itemized deduction. So in that case, you will complete worksheet 2.4 as well, and the result from this worksheet will go to worksheet 2.1, and then you'll go to the worksheet 2.1 to finish it up. And the worksheet 2.1 allows you to estimate the tax. That's the estimated tax worksheet, and that's the recommended way that IRS suggests you do it. That allows you to calculate the tax close to the actual that is going to be. And doing so, you will need your last year adjusted gross income, which you will find when you pull your 1040. You'll find that on your 1040, and you just pay attention to it to find the adjusted gross income, and the amount from that you might need it at some point on those worksheets. So how do you figure out estimated tax for stock investor, part-time trader, or passive income earners? So if you make money on the side but is a passive income, your time is now the income is now considered as an active business activities. You are not going to calculate self-employment tax on it, like Social Security and Medicaid. Therefore, you will use worksheet 2.5 for capital gain. You'll use standard deduction worksheet 2.4 if you are going to claim standard deduction, and then you will use worksheet 2.1 to estimate the tax. So the worksheet 2.5 the worksheet 2.5 capital qualified dividend and capital gain tax worksheet will allow you to include the income you made from dividend. Capital gain could be from selling stocks. And you'll be able to use the worksheet to compute data related to that income, because you'll apply some different tax level or some tax rate to different sources of income on it, whether the income or the gain is a short term or long term. And then you will complete, and from there the result from it will go on worksheet 2.1, and there is worksheet 2.6 as well, that if that concerns you, you can look at it. And after that, you will complete worksheet 2.4, the standard deduction worksheet, if you are going to claim standard deduction. And then you will go to worksheet 2.1, trying to look for something here. You'll go to worksheet 2.1, and then you'll enter all the data in the worksheet 2.1, including the adjusted gross income that you are expecting for 2023 by using 2022 adjusted gross income to guide you. And you'll be able to calculate the tax, the estimated tax. Also, okay, so if you are trying to figure out how to estimate a tax for, because you are a stock trader, which will be the same thing as a self-employed if you do not have a business entity like an S corp, for instance. If you are a self-employed stock day trader, then you will just go through the same process as a self-employed. You will use worksheet 2.3, you'll use the standard deduction worksheet 2.4, and then the worksheet 2.1 to estimate your tax. So you'll use worksheet 2.3, because as a day trader, if you are in the sense of you are considered a business activity, a day trader. You are spending your time trading, and I think there is a definition. And I think if you trade more than 3 times a week, you are considered a day trader, and therefore you will pay tax on you'll pay self-employment tax like social security and Medicare on your profit, and you'll deduct business expenses as well. So self-employment worksheets might be the right one for you, in addition to the standard deduction worksheet 2.4 and then the worksheet 2.1 to estimate the tax. So we got that one down. So 2023 tax rates, I showed you that earlier. We are going to use it to go through an example with the second option. So now we talk about the first option, where do you use the worksheet to close to accurate calculate the estimated tax payment. So how do you estimate your income tax on earned income not subject to withholding? So, and this will help you if you are trying to use the second option to determine the estimated tax. So now we are going to talk about the option 2, where there is a chance you will have a large refund when you file your tax, because you pay a lot more taxes by now estimating it too closely to the actual numbers. So to do that, you will have to actually estimate your earned income. So let me see if I have that spreadsheet open. And let's go back to the 2020. So what you will do is you will So you will estimate how much your income, let's say you have a job as well. So you'll estimate your income, because your salary goes up a little bit. The thing is, your employer is already withholding tax off of your income, so you don't really need to worry about that, the tax to pay on that portion of your income. But it's just going to help you to find the tax bracket that you are in. So you can just use your pay before tax. No, is it? Yeah, like now your take home pay, but your pay, your gross pay before tax is withheld. You can just use that to estimate your annual payroll. And if you have a spouse, you can combine both. If you file jointly a joint tax return, and then you estimate your side hustle that is now subject to withholding, which is the reason why you are doing all of this. You will estimate how much you are going to make during the year as income on the side as well, that no one is withholding tax on, and you total them all. That will be your estimated income. So in this example, for my husband and I just use a general number here for our salary, that it will fall within that. And then I estimated that through dividend income, because we invest in dividend, we might earn about $5,000 as dividend income that no one withheld tax on. And then we trade stocks a little bit. So as a part-time trader, we might earn a profit about that amount, and therefore the total give us the estimated annual total for the household. So we'll take that number and we'll go to the publication 505, page 29, 2023 tax rate schedule. So we look for file married file jointly section, which is schedule Y1, and then we look for that 113 tax bracket. So which tax bracket 113 pretty much 200 is falling within. So 113 200. So we are going to make sure it is more than the first amount in the bracket, and that will be it is over. So that means it is over 89,450, but it is less than 190,750. So the tax bracket related to this example will be 89,550 to 190,750. So knowing the bracket with that income falls within, we will look for the column that says the tax is. We will look for the tax rate associated with that tax bracket. So that 22% is what we are looking for. That's why we want to know how much our payroll, our income, our wages will be, to make sure the income we are making on the side plus that payroll does not push us to the next tax bracket. That way we can use the right tax rate. So we are not even going to take the 10,000 times 22% of the amount that went over 89,000. We are just going to take the 22% tax rate, and we will go to our estimated tax, our estimated income that no one withheld tax on. We will apply that 22% on it. So estimated tax, and that 13,000 is those incomes earned on the side, passive incomes that will be subject to income tax. That 22% is income tax. Because they are passive income, we do not need to pay Social Security or Medicare on those. And so when you do that, you will find your annual estimated tax. That's what you owe for the whole year. And then you can divide it by 4 to find what you need to pay every quarter. Alternatively, no, not alternatively, but in addition to that, you need to do the same thing for your state as well. And then you can just, for the quarterly state, you can divide it by 4 as well, or whatever you wanted to pay. And then when you take that quarterly estimated tax, you need to, then you can make those payments on a quarterly basis. So if you are a self-employed, or let's say that income on the side is a native business income, that 13,000 is not a stock investment, it is more a side hustle, maybe a freelance income, that will be subject to self-employment tax. So to roughly calculate that, we already find our tax bracket. That is what the federal income tax is, and in this example is 22%. Then you take 12.4%, which is employee and employer portion of Social Security, and the Medicare tax employer and employee portion, which is 2.9 combined total, and you take both. And because you are working with 13,000, I'm not going to talk about, it's not over 160. But if the amount that you want to pay estimated tax on is more than 160,000, you only pay Social Security up to 160,200 in 2023. Anything you earn over that, you don't collect you don't pay Social Security tax on it. If that income is more than 200,000, you will pay 2.9% Medicaid tax on it, and then the amount above $200,000, you will pay that 2.9% and an additional 0.09% on that amount over $200,000. But since we are working with $13,000 in our example, and we are assuming that it is an active business income, then we'll use 12.4%, 2.9%, and that 22%. So that means you will have 12.4%, you'll have 2.9%. So we know that we already calculated, and the federal income tax is 22% for the tax bracket that we are in. We already calculate that. Now you will take that active business. If you have if that 13,000 is related to an active business activity, you will term it by the Social Security as well, and you will term it by the Medicaid tax as well. So your total estimated tax, if you are a self-employee or the income is from active, like from freelance business or business that require to spend your time in it, is an active business activity that generates that income as a self-employed, that will be the total tax for the year estimated, and then you will divide that amount by 4, and that will be your quarterly estimated tax to pay on that 13,000. So pretty much you'll be making about $5,000 estimated tax for the year on that $13,000, and that includes your Medicaid tax, your Social Security tax, and your income tax. Your income tax, your Social Security, and your Medicaid taxes. So all those taxes together you can take that income times, and it should give you the same amount as well. So that's a very quick way to estimate your income for the year and to find your federal income tax. And within that income, you need to know how much you are going to make on the side hustle, and then you find the tax, your federal income tax bracket. You can apply that to the income that is not tax, to find the annual estimated tax, and then you can divide it by 4 if you want to make quarterly tax payment. So that's how you find your income to be able to find your tax bracket. So another option that is very convenient is to let your employer withhold more taxes on your income. So if you have a job and then you have your side business as an employer, a self-employed or a freelancer, you can just let your employer withhold more taxes on your paycheck. So you will update your W-4 employees withholding certificate with your employer, and step 4C extra withholding, you will first estimate how much your income your side hustle income is going to be, or your passive income is going to be, and here we estimate that it's going to be 13,000, then we can determine the tax bracket will fall within, which we did, and that led us to 22%. So you take that 22% times that 13,000. If that's a passive business, you know that you don't need to pay self-employment on it. So you just work with this federal income tax on that 13,000, and that give you the estimated tax. So now that you know the estimated tax that you need to pay, you will need to know how many paychecks you get a year from your employer. So you take the estimated tax on that side passive income, and you divide it by the number of paychecks you'll get from the employer. When you do that, it will give you how much your employer will withhold from each paycheck for you, so that by the end of the year you have the total match your estimated tax. That's a convenient way of doing that as well, and I have done that in the past when I have a full-time job, or I have multiple part-time job, or I have a full-time job and part-time job. The part-time job usually didn't withhold much from my income because they are estimating the annual income based on what I was doing with them. So my W4 with the full-time job or one of other part-time job, I will specifically put a dollar amount to be withheld in extra to cover, just in case what is withheld from my salary from other part-time jobs is not enough. And a lot of time I will just choose in step 1C, I'll just choose single or married separately, so that I'm taxed at the highest tax bracket to make sure I'm paying enough tax. That way I won't owe tax when I file the tax return, because I usually do things outside of my full-time job to make income, and now all of them will withhold taxes automatically. Therefore, by doing that, I make sure I'm paying enough tax through my employer to cover, those side hustles, income from them, if that makes sense. And the reason why I'm talking about this is, like having dividend incomes and trade income from trading stocks, it got to the point that we might have to make estimated tax, or I might have to update W4 from my employer to withhold more, to let them withhold more. And I'm leaning toward making estimated tax. That way I won't rely on my employer for those things. So little by little, I just don't rely on my employer for convenience sake, but going through the trouble to do the estimated tax and be in charge of excuse me, and get into that routine. Because usually my W4 I check to be taxed as a single, I'm taxed at the highest tax bracket anyway, with no deduction claim on the W4. Therefore, I know that we will have enough, and we get a large return back due to that. It will cover that. But for sure, for the state, we will need to make estimated tax payment, because usually we owe the state about $300 to $500 when we file taxes, and I had to mail it in. But I think it will be in our best interest to make an estimated tax to the state. For sure, for the IRS is not necessary, because we know that we have enough withheld from our W2 job to cover that. But I want to make that estimated tax to get into that routine as well. So, but okay. Another option is to let your S corp withhold more from your paycheck. So if you have side hustles Like in this example, income from dividend stocks or part-time trading aside, and you have a S corp business or LLC tax as an S corp. If your business, you are making enough income in your business and your business is paying you, you might just let your S corp withhold way more than how much they will withhold based on how much they are paying you. That way they can withhold more to cover what you will, your estimated tax will be on those side incomes that you are doing outside of the S corp. And you will estimate the tax the same way we did it, and then you will update the W4 with your S corp, and you divide the estimated tax by the number of paychecks you'll get from your S corp to find the amount, the extra amount that needs to be withheld from each one of those paychecks, so that you can pay enough estimated tax to cover what you are doing, income you are generating outside of your S corp that is subject to tax. How to make estimated tax payment to IRS? So you have two choices: online payment and payment by mail. Online payments, they have multiple options, and you can find that on the, I think on 1040 ES. ES page 3, they have multiple options. You can create an online account to pay. You can use IRS direct pay to have online transfer between your bank account and IRS. You can pay by debit card or credit card and pay a fee on it. Or you can just, if you find all those options, just to elaborate, you can just use the old-fashioned way, mail it in. So you have to complete a voucher, and then you will mail your check. I prefer check over money order though, because you have space to write things. But check or money order, you add it to the voucher and you put in the envelope and you write the right address on it. So where do you mail your payment, your estimated tax payment to IRS? So in the right column, you look for your state, and to that section you locate the address that you should put in the on the envelope, and you mail it via USPS with a tracking number. And make sure you make a copy of the check and the voucher, and then you record the amount you are paying as well, and you keep the tracking in your record. And the amount you are paying, you need to record that, because when you are filing your 1040 at the end of the year payment section, you will be asked to put estimated tax payment. So you'll need to total all the estimated tax payment and add it on your 1040. So you need to track it, and you'll be able to find the voucher on form 1040 ES for 2023. If you are working for 2023, you'll find that toward the end. So they have the voucher for you. Use the right quarter for the right quarter. But yeah, they have all the vouchers. So when should I pay estimated taxes? So I will just go with the general term, but based on the year, the exact date will change if that, because of the weekends as well or holidays. So, but in general term, you'll make the first payment by April 15, the second one by June 15, the third one by September 15, and the fourth one by January 15 of the following year. And if you are a fiscal year taxpayer, that means your tax year does not end on January 31st. You'll make your payment on the 15th of the 4th month of your fiscal year for the first payment, you'll make the second payment on the 6th month of your fiscal year. You'll make your third payment on the 9th month of your fiscal year, and then you'll make the last payment on the 1st month of your fiscal year following year, if that makes sense. And you'll be able to find more information on it in the form 1040 ES, I believe, page 3. And for the taxpayer, and still page 3 for the regular calendar year ending on December 31st. And for 2023, the date is a little bit different for the first and the last payment. But I just like to go with that 15 so that it's a routine. Get into my routine. Can I pay estimated tax all at once? Yes, you can do that. When you want to do that though, you'll make sure you pay it by the due date of the first payment. You just pay for the whole year. Like in this example, and that will be my preferred option. If we know we will owe about $3,000 in estimated tax for the year, I would prefer to just make that by April 15 for the whole year, if that makes sense. And if you are going to mail it in, then you will use the voucher 1. You'll use the voucher 1 for quarter 1 and make all the payment on that voucher. And can you, is it better to underpay or overpay estimated taxes? I would say it's better to overpay your estimated taxes. When you overpay, you'll get a refund back. If you underpay and it is below 1,000, like you owe less than 1,000, you'll pay when you file your taxes. But if what you owe is more than $1,000, you'll get a penalty on it. So I prefer to overpay and get a refund back. But again, if you want to pay close to what you will owe, then using the worksheet to calculate and take your time to calculate will be the best option for you. But if you do not mind paying more and get the refund back, it's not that if that is in your pocket, you'll actually make it work. You might use that as an argument. You can trade it and lose it. You can make profit on it as well. We all have different reasons why we do things, and I have mine. So you just have to see what option works for you. If you don't mind spending time to complete the worksheet to accurately estimate the task and then use that to make your estimated taxes, that's fine. But with me, I don't like other people have control over me. Therefore, I don't mind leaving some money on the table to make sure I don't owe anyone. So I have more of that attitude. So our personality tend to flow a little bit into what we do. So, I'm independent. I'm very independent by nature, and I like to follow the rule. So I do not want to owe tax, and I don't mind if I pay more and get a refund back. And when I get that big chunk amount of money, I use it for something useful that I can say that's what we use it for. But yeah, but again, it's personal option. Last year, we owe the state for more than $1,000 and we got a penalty on it. And I didn't really think that we will need to make an estimated tax. And yeah, but I've been thinking that I needed to update my W-4 to let my employer withhold more from our from my income for the state. But then usually when we owe 300 or 500, we just write a check when we file the tax. Yeah, I didn't really think much of it. But this year, I think I'm just going to make it into a routine to make the estimated tax instead of waiting, instead of using my employer for that. And the reason why we went over last year with is just an income that my husband received that push us over, but they fed the some income, some tax was withheld from it for the federal, but just it didn't come. I didn't really realize it or didn't really think about it that we should have requested they withhold something for the states, or we should have made estimated tax for the states, and we didn't, and we got penalized for the whole year, like if we received that income for the whole year when it actually came in toward the end of the last quarter of the year. So yeah, you may now know that you'll owe tax when you are doing things outside of your job, but it's something to consider when you have your job and you have other different sources of income, to see how to estimate your taxes so that you can pay, you can pay what you owe or what is due, if I will say that. So having those different sources of income, and instead of updating W4 with our employer, which is not convenient, but again, not to just rely on those conveniences, but just if I wanted to be more in control of my things, I better work for it and just get in the routine of making those estimated tasks. Then I will need to get into that routine, make that a routine, and I wouldn't mind making all the payment at once during the first quarter. But again, you have the option, just be aware that if you have an LLC and you are making profits, you need to be making estimated tax. And the way you will do that, if you have an LLC, you can actually use your income statement to determine your profits. If you are self-employed and you have a business, let's say you sell things, you can use your profits, and your profit should not include your business expenses. It should just include your sales. It should just include your sales, and it should just include your sales and the cost of goods sold. So you take your sales, you take the cost of goods sold out of it, and the gross profit, you can use that. If there is other sources of income, like from paycheck, you add it to it, and you go find the tax brackets that total household income for the year will fall underneath based on your filing status, to find the tax bracket to use, the tax rate to use, and you time that by that income, that gross profit, to know the estimated tax. And keep in mind, if you have business activity, income from business activity, you will need to apply Social Security and Medicaid to your federal income tax to find the total tax that you need to apply on your gross profit. If you are a freelancer, you just use the income you are receiving to time your federal income tax, your Social Security tax, and the Medicaid tax. And that income, if you have other household income, you add it together. That will go on your tax form. You add it together to find the tax bracket shouldn't have clicked on this, to find your tax bracket that you fall within, to find that rate and add social security tax, Medicaid tax, to find the total tax to apply to that income. And the reason why I'm saying now to try to take your business expenses out of the gross revenue, so that you do not deduct more than you should have, because there are some expenses that are depreciable, some assets that are depreciable unless you are claiming 179 deduction on them. So when your tax preparer is filing your taxes, you will deduct your expenses there, and your expenses will be able to lower your income, your taxable income. And then when the tax that you'll have paid is calculated, they will compare it to the estimated tax that you made during the year, or the withheld tax, and the difference between the two will be your refund if what you paid is more than what you owe, if that makes sense. So, but if you are trying to lower your profit with business expenses that are not directly related to the sales, and you withheld some that you shouldn't have, you will use an underestimated income to start with. But yeah, if you are selling things, you'll have the cost of goods sold that you can take out of the profit, and that's pretty much it. You do not take other business expenses out of it, and you use that gross profit to, like, you take the sales, the total sales revenue minus any refund and minus cost of goods associated with that, with the sales, the sales, to find the gross profit, because many business owners tend to deduct all their purchases, material purchases during the year, but it is an inventory. So it's better you work with the cost associated with your sales. And if you are if your income is passive, then it's just that income. If you are selling stocks, then is the stock, the sales price minus how much you pay for it gives you that gross profit that you will use in determine your tax bracket, to find the tax rate that you will use to calculate the estimated tax. And then you can go from there. Thank you so much for watching. And if you need to make estimated tasks, you need to make them on time. So, and you have all those deadlines that you need to follow through, and you'll be able to find those forms on IRS website. You just go to IRS website, irs.gov, and you will search Form 1040 EZ, 1040 not easy, ES. I hope I have not been saying easy, but and you'll just download it to save, and then print it out and cut those vouchers from it. And that's the same way you will search publication 505. But when you download the form ES, it does have the instructions with the form as well, and it does have the task, it has the date, it has the address, and that is the address you will mail if you prefer to mail. It has the due date as well, and it has the 2023 tax rates, and they're updated for every year. So for 2024, you'll be able to pull for the current one as well, and you'll have the tax rate schedule, and it has the worksheet as well. Although I use the worksheet from publication 505, it does have the worksheets. I just don't know if it's naming it the same way or not. And even have a record tab where you can record, how much you have been paying. No, it does not have the worksheets. It only has, let me see, you only have one, which will be most likely the worksheet 2-1 to estimate the task. So you will need publication 505 for the worksheets, because it has all the worksheets. So you will just search a publication 505 to access it as well, and you just download those and keep them on your folder. So let's see, publication 505, and you should be able to open that as well and find the worksheet. And if you prefer to use the worksheets, you can just have the PDF version. Thank you so much for watching. We thank you very much for all your comments, and thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoup.com, our blog. And our blog, we do have a section for links to IRS publications that I tend to save the links to those publications that you can take a look as well if you are looking for something you don't find. But we do have the free download session where you can find different type of templates and spreadsheets to help you manage your money and your business. On our channel, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on your employer to provide for your family. And if you are having a side hustle outside of your job, you are having a passive income, well, you will need to estimate tasks that you might owe IRS and your state and pay those. And estimating those things yourself is a way to save money by doing it yourself, to save money. But just keep in mind that there are two ways to do it. One way that will make you to pay less tax, but it takes more time to work through those worksheets. And the other option that is easy, but you'll end up paying more tax and get a large refund back. So whichever works for you. But yeah, thank you so much for your time. We will have the full article on our website in case I forgot something. Thank you.